Good evening, Kryptonians. This is Crypto Big Boss coming to you with another informative video. Today is October the 8th, 2021, and I just wanted to talk to you about this debt ceiling and the ramifications of what it means to us as investors in crypto. Because I think what's happening out there now is that people are still, I can't believe this is really possible, but there are still people walking around like ostriches, sticking their heads in the dirt, pretending like cryptocurrency is a fad. I know that if you are a subscriber, if you have liked and subscribed to this channel, you are well informed and you realize that crypto is not going anywhere. You've been able to put a little bit of money in your pocket listening to these videos and finding out information before it happens, as it happens, and hopefully you guys appreciate that. Drop comments in the comments section. But today's video is about this debt ceiling. And, you know, there's an interesting article out there on CNN talking about Jamie Dimon and JP Morgan. You know, Jamie Dimon has a sordid history with crypto in that he was one of those people running around here saying that crypto was terrible and it wasn't worth anything. And the rumor is that he even called people who bought it idiots, and even threatened to fire people that actually bought it. It's all kinds of crazy rumors about Jamie Dimon. But this isn't really about Jamie Dimon. It's just interesting that right now with the debt ceiling issue, Jamie Dimon is trying to get JP Morgan Chase, the bank, prepared for future possibilities that America will default on its debts. You know, this article is very good. It talks about how, you know, if something were to happen where the United States were to default on its debts, you know, what would it mean to the rest of the world? So, you know, I thought it would be interesting if we could see if there was a correlation between the debt crisis, i.e., every time they raise the debt ceiling for the U.S. Treasury, does it have any effect on Bitcoin or cryptocurrency in general? And even if it doesn't, what actually did happen historically during those years when the debt ceiling was raised? So the first thing I looked at was in 2011. Interestingly enough, there was no data on CoinMarketCap.com that said anything about, you know, Bitcoin. You know, back then it was still new. It was, you know, it was something that people didn't know anything about. If we look at this, you know, this is another article. Let's take a look at this one. This is another article on Coindesk that says standoff over the $28 trillion of U.S. government debt could rattle Bitcoin. So in this article, the folks are taking a stance that now the big markets are very correlated with the cryptocurrency markets. And I would tend to say that that is true. But I remember before big money and institutional investors got into crypto, that Bitcoin and the crypto market seemed to do the opposite of what was going on with the stock market, i.e., it was a good hedge. But now what they're saying is that the government debt could rattle the Bitcoin market. So this article here on Coindesk is going into the arguments for and against that hypothesis. And I wanted to bring you to this little piece here where it says that it's not insulated. I'll read this to you. It says Bitcoin has sometimes reacted well to weakness in the American economy, such as last year when cryptocurrency price quadrupled. Listen to this, quadrupled as much business and consumer activity went on lockdown. during the COVID-19, right? So in that respect, another seismic market moment might give Bitcoin a chance to prove itself as a hedge against instability in the U.S. government finances. Hello, there it is. Bitcoin has proven to be a hedge when the United States economy is in trouble, i.e., if it did it in 2020, and now here we come up in 2021, and they're talking about debt ceiling crisis as we march into 2022, fiscal year 2022. Is Bitcoin and all the other cryptos, once again, could they possibly serve as a hedge? So it goes in and it says, but the cryptocurrency industry is still immature. I disagree. Compare it with traditional financial system, and Bitcoin is still largely considered a risky asset. I disagree with that too. So then they go on to say that's particularly hard or impossible to get in a crisis like debt limit episode. So this guy Rousseau, during a default correlation, go up on everything. Stocks and bonds become more correlated, and Bitcoin becomes more correlated with everything. So in this, they're trying to say that as the Democrats and the Republicans squabble in Congress over the debt ceiling and whatever they're going to do, they're saying that Bitcoin's price is more aligned with the stock market. However, I wanted to draw your attention to the year 2013. A short visit over to Wikipedia. Okay, let's take a look at this, folks. A short visit over to Wikipedia. We can go in and we can, like I said, I couldn't find much data about Bitcoin in 2011, but we can see that in 1995 there was a debt crisis. In 2011 there was a debt crisis, and in 2013 there was a debt crisis, and now in 2021 leading up to 2022 there's a debt crisis. Folks, I want to show you a little list of what happened in 2013 to Bitcoin itself during the 2013 debt ceiling crisis. Not very different from what we are seeing now in 2021. Let's take a look. How about this, folks? Let's take a look. Let's start way back here in, let's look at the price. Okay, let's go right here. We're going to go all the way. There it is. April 2013. Price of Bitcoin, $132. Going into May, it's 109, 113. Let's see what happens as we get into June, coming into summer. 106. Okay, we're going over here. Okay, is this really Bitcoin? Let's make sure. Yeah, we are looking at Bitcoin. So as we go into the fall, 125. Look at this. Uh-oh, look at this. $200. Look at this. November, $456. Uh-oh, November 21st, $577. November 28th, $962. Uh-oh, December 2013. Uh-oh, $1,000. Look at this. Uh-oh, we're going up here to 2000 and look, we're almost there. December 21st, $579. Closing out the year, December 31st, $738. Wait a minute. Hold up. 700 on January 1st, 2014, $754. If I go all the way down here to April 28th, 2013, $134. Folks, look at that. Went from $100 and something dollars. Let's look at that again. From $134 all the way up to $771, actually $754 on December 31st, 2013. Would anyone care to run the numbers? I'll run it for you. Okay, let's say 754, divide that by, what do we got? 134. What do we get? That's 5.6 times. So in 2000, in English, in 2013, during the debt ceiling crisis, Bitcoin went up 5.62 times. And here we are at the beginning of the debt ceiling crisis. They're going to go ahead and raise the debt ceiling. Okay. But, we don't know how long this is going to carry on. In 2022, as we roll in, what kind of deals are they going to make? Are they temporary deals? Are they band-aids? So the 2021 debt crisis issue could roll in 2022. And the question is, will we have the same kind of behavior from Bitcoin and other crypto assets like we saw in 2013? We saw a run-up of 5.6 times on Bitcoin in 2013. And here we have now an asset that they're calling immature, yet it's still $1 trillion market cap on Bitcoin, and the debt ceiling is here again, and they're going to have to raise it. Folks, the reason cryptocurrencies were created were to deal with problems just like what we're seeing with the debt ceiling. The United States government continuously putting out more and more money, creating more and more currency, devaluing U.S. currency, raising the debt ceiling, never getting their hands around the budget, and exhibiting any kind of discipline when it comes to fiscal responsibility. This is why cryptocurrencies like Bitcoin, Ethereum, and all the others stand every chance to gain in value during crises like this. We've already seen how other foreign governments are adopting cryptocurrency as their national currency, and here we have the United States facing impending doom once again, like they have in 3 other periods in history. And I wonder, no, I know, I don't wonder, I know what's going to happen. This most certainly is going to help the case for Bitcoin's price. So while all the other crypto evangelists are just blowing smoke and saying, throwing their hands up, I'm trying to tell you that we have historical evidence that basically outlines that in no uncertain terms, a debt ceiling crisis causes Bitcoin, or can be correlated to Bitcoin actually going up in value. And as we all know, when Bitcoin goes up, all the other cryptos go up. I have said many times before that everything that's in the top 10 cryptos, okay, could have $1 trillion market cap or more. Here we are now with Bitcoin about to hit maybe $56,000, $60,000. We got a $54,000 Bitcoin, a debt ceiling that's just been raised, and uncertainty about government shutdowns and about 2022 and a COVID-19 crisis that has not been abated. What do you think is about to happen to the price of Bitcoin? I said earlier this year that I could see an $80,000 Bitcoin. I said earlier this year that I could see an $8,000 Ethereum. I did not foresee that I was going to have a debt ceiling crisis in the fall of 2021, much like they had in the fall of 2012, and ride a wave right into 2022 like they rode into 2013, and voila, 5 times on your money, 2 times on your money, 3 times on your money. Folks, it's time to look at history, learn from it, and hey, take advantage of it. Now, this is not financial advice, it's just my research, but you can see for yourself. There's the price of Bitcoin on January 1st, 2014. $771.40. Before 2013 debt crisis, you go way back here. Let's do a load more here. Let's go and see if we can get further down in there. April 28th, 2013, $134. It's academic. So I hope you guys have enjoyed this video. I certainly hope that the United States abates the debt ceiling. But while they're sitting up there trying to figure out how they're going to be fiscally responsible for the first time in history, we might as well take advantage of what history has taught us. This may be a great opportunity to increase our portfolios. So with that, I hope you've enjoyed this video. Throw up the likes, throw up the shares, and I'll catch you on the next one.